Welcome to Project Syndicate Algo Trading Systems Tutorials. In this series, we take the ideas that separate operators from buyers, expectancy, risk, market regimes, execution, and cost, and make each one plain in a few focused minutes. No hype, no hooks, no screenshots of profit. Just the trading logic, built up one metric at a time. Let's begin. Your algorithm can be perfect and still fail, because the machine it runs on is the part nobody engineers. People obsess over the strategy and treat the machine it runs on as an afterthought, a commodity box you rent for a few dollars a month and forget. That's a category error. The VPS isn't IT overhead sitting beside your trading system. It is part of your trading system as much as the entry rule or the risk model. Every order your algorithm sends passes through that infrastructure, and any weakness in it, latency, downtime, distance from the broker, silently taxes or breaks your edge. The part nobody engineers is the part that quietly decides whether the engineered part ever gets to work. Let's name the ways infrastructure touches your results. Latency, the time between your algorithm deciding and the broker receiving the order. On slow or distant infrastructure, that delay means worse fills, especially in fast markets, a direct, per-trade cost. Uptime, if the server goes down, your algorithm isn't trading, and worse, it isn't managing existing positions. Proximity, a VPS physically close to the broker's servers, shaves latency in a way no-code optimization can. And maintenance windows, the reboots and patches that, unmanaged, can leave your terminal closed for hours. Each of these is invisible on a backtest and very visible on a live account. Here's a VPS selection scorecard, the criteria an operator actually weighs. Latency to broker, measured in milliseconds, the lower the better, and location is the biggest lever. Uptime guarantee, look for a real SLA, ideally north of 99.9%, and understand what happens when it's missed. Resources, enough RAM and CPU to run your terminal or terminals without the platform choking during volatility. Location, choose a data center near your broker's execution servers, not near you. And redundancy, what's the recovery plan when the box fails? Auto restart of the terminal, monitoring, alerts. Score any provider against those five and the cheap and cheerful options reveal themselves fast. Provisioning is only half the job. The other half is monitoring. A serious operator sets up the VPS so the terminal auto-launches and auto-logs in after any reboot, so a maintenance window doesn't equal a trading outage. They add uptime monitoring that alerts them if the server or the terminal goes dark, so they learn about a disconnect in minutes, not at the next daily check. They keep enough resource headroom that a volatility spike doesn't freeze the platform. And they know their recovery steps cold. So a failure is a 5-minute fix, not a panicked afternoon. The infrastructure is treated as a live component because it is one. Picture the worst case that this prevents. High-impact news is about to print. Your algorithm has an open position and a plan for the event. At exactly that moment, the VPS drops its connection, a routine hiccup on an underspec or badly located box. For the next several minutes, during the most violent price action of the week, your algorithm is blind. It can't manage the position, can't hit its stop, can't react. Price runs against you, unmanaged, and you find out when connectivity returns. The strategy did nothing wrong. The infrastructure, the part nobody engineered, failed at the one moment it mattered most. So, when you evaluate an automated operation, don't stop at the strategy. Ask about the stack it runs on, because you don't just buy a strategy, you operate a stack, and the weakest layer sets the ceiling. The VPS is part of the trading system. Choose it on latency, uptime, proximity, and redundancy. Monitor it like the live component it is, and engineer the machine with the same seriousness you give the rule. A perfect algorithm on bad infrastructure is a bad system. Engineer the whole thing. If you want the operating notes and the companion framework for this episode, they're linked below. I also post the implementation side in Telegram. Use what is useful, ignore what is not, and I'll see you in the next one. That's the lesson. One metric, understood properly, is worth more than 100 you half know. If it sharpened how you think, subscribe and tap the bell so the next tutorial finds you. Drop a like and tell me in the comments which topic to break down next. The operating notes and the implementation side are linked below and in Telegram. Use what's useful, ignore what isn't, and I'll see you in the next one.